Welcome to Financial Patterns, where we decode the trends shaping your money. And today, we're exploring fractional ownership, a 2025 game-changer letting you invest in luxury assets like art, real estate, or vintage cars with just $500. Platforms like Rally and Arrived make it possible. This video will show you how to start, potential returns, and risks to avoid. Hit that subscribe button, and let's unlock the pattern to owning a piece of luxury. What is fractional ownership? Fractional ownership lets you buy shares of high-value assets. Think owning 1% of a $1 million Picasso or a rental property. In 2024, the fractional investment market hit $12.9 billion per Forbes, driven by platforms like Rally Art Cars Collectibles and Arrived Real Estate. With $500, you can invest in assets once reserved for millionaires, earning returns from appreciation or rental income. Let's dive into how it works. Top platforms to start. Rally offers shares in assets like a $500,000 Ferrari or rare Pokémon cards, starting at $10. In 2024, a Rally comic book investment returned 15% after a year. Arrived lets you buy shares in single-family rentals for $100, backed by Jeff Bezos. Its properties averaged 8% annual returns, rent plus appreciation, in 2024. Masterworks focuses on art, with $500 minimums and 20% average returns since 2018, like a Basquiat painting up 29%. Check asset details on platform sites or X for investor feedback. Build a $500 to $5,000 portfolio. With $1,000, allocate 40% $400 to Arrived for real estate, 30% $300 to Rally for collectibles, and 30% $300 to Masterworks for art. Diversify across 3 to 5 assets to spread risk. For example, $500 in Arrived's rental properties could earn $40 per year in dividends at 8%. Use dollar cost averaging. Invest $100 monthly to avoid overpaying. Platforms handle management, but check secondary market sales for liquidity. At 10% returns, $1,000 could grow to $1,610 in 5 years per calculators. Risks and considerations. Risks include illiquidity. Rally and Masterworks lock funds for 1 to 7 years, though secondary markets exist. Market volatility. Art or collectibles can drop, as seen in 2022's 10% art market dip. Fees. Platforms charge 1 to 2% annually. Research asset history on Sotheby's or Zillow for real estate trends. Monitor X for market sentiment. Start with a $1,000 emergency fund before investing. Want a platform breakdown? Comment below. Tips to maximize returns. Focus on high-growth assets like rentals in hot markets, e.g. Austin, or trending collectibles, e.g. vintage watches. Set alerts on platforms for new offerings. Reinvest dividends to compound gains. Join our 30-day fractional investing challenge with #LuxuryAssets2025. Tip: use free tools like Google Trends to spot rising asset classes. That's how to invest in luxury assets with $500. Use Rally, Arrived, or Masterworks, diversify, and watch risks. If this helped, smash that like button and subscribe for more tips. Check our Wealth Building Challenges series and follow us on X for updates. Comment: what luxury asset would you own? Let's keep decoding financial patterns together. See you next time.